What's up, guys? Brendan from Market Makers. Pro Trades video, my friends. Guys, lots of news going on. We posted a short last night on the SPX in the room, paid off major dividends. The Fed is meeting Tuesday, Wednesday. What will they announce? When will they announce it? We have to stay tuned and watch. Most people expect them to announce a stronger taper, could be doubling the taper, reducing asset purchases, possibly raising interest rates. All of these things can have either an instant effect on the market or a cascading effect. And by that, I mean you could see the market correct. If you have a correction, that's a 10% drop up to a 20% drop. Anything over 20% drop is a crash. I personally don't expect a crash, would not be surprised to see a correction between now and New Year's, or we could just see a general downtrend in the market. Remember, retail investors at record rates piled into what they call the Omicron dip. Okay. Now we were shorting these markets back on November 8th and 10th. Okay. We already saw the metrics, the market movement, the momentum, the fact that 1 out of 5 companies in the S&P can't service their own debt. Okay, they cannot pay their own debt. They have to roll it over year to year. What does that mean then if they raise interest rates? It means it's more expensive to service that debt. So these things take time to unfold. And whatever the Fed says, it doesn't mean it's happening that day, but the market reaction can be instant. That's why it's an exciting time to trade. And no other time is better to understand how the market moves in Fibonacci patterns and technical analysis, guys, because this is how you're going to profit in this type of market. It's very easy to be a trader in a bull market. Beginning of this year, S&P up for the year 25%. 25%. That's not going to continue into next year. You're going to be in a decline. Most traders do not know how to short. Most traders do not know how to play a declining market. Patterns are key. Fibonacci trading's key. Market momentum's key. We do all of that in our room. Check out our Discord link. That's my spiel. Didn't mean to go on a rant. Guys, interesting fact. You know, if you take out the top 5 companies out of the NASDAQ, off the top of my head, it's Microsoft, Amazon, Tesla, NVIDIA, and Zillow. You take out those 5 companies, you know what the NASDAQ did this year? Minus 25%. Remove the top 5 companies, the NASDAQ's actually minus 25%. This is a high flyer. Okay, these are high flyer syndrome. This is when you have several very powerful, wealthy companies carrying the index. And when you see these companies start to crumble, like Tesla, could be a reason, by the way, Elon Musk sent out yet another tweet. We know he likes to tease with tweets. He sent out a tweet last week saying he's considering leaving his jobs with an S, plural. He's considering leaving his jobs to be a social media influencer. Now, when you marry that with the fact that Elon has sold over 12 billion, including another billion last week, sold over 12 billion of his stock in Tesla, and he had leaked an email, or an email got leaked that he sent to the employees of SpaceX saying SpaceX is facing bankruptcy next year if they can't launch 2 rockets a month. And then a week later, he sends out a tweet saying he's considering leaving his jobs. I actually think he's serious. I think he's feeling that out to see how people react. Do you know what would happen to Tesla stock if Elon Musk left? He is the company. Already we've been shorting Tesla, right? It's way overvalued. Michael Burry said the actual fair value of that stock's probably like $200. We started shorting it at over $1,000 in the room. That trades in the room. We started shorting Lucid, Rivian. All these companies are so overvalued, especially the EV space. They make no money. Tesla actually hasn't made any money from selling its cars. It makes money from selling the emission credits. It makes no money from selling its cars. Most people don't know that. Tesla made $100 million this year off of Bitcoin. It only made $400 or $500 million total, and most of that came from selling emissions credits. Could be a great company. I actually like the company. I have a Cybertruck on order. I joke about this all the time in the room, but the company doesn't make any money from what its core business is, okay? And SpaceX could be facing bankruptcy. Elon Musk floats that tweet out there, hey guys, I'm considering leaving. It's just all interesting, guys. What an exciting time to be in the market. Let's get back to the market. DXY, sorry, I had a lot of caffeine today. DXY. The Fed news coming out, like I said, Tuesday, Wednesday. Expect the dollar to shoot up. If the Fed takes any type of increasingly aggressive measure, the dollar will shoot back up. We fell out of our pitchfork. We caught a bearish white swan, but already I can see this right here. Let me show you a pattern. Turn my magnet on. I see a bearish pattern, but it calls for the dollar to rise. let's get this. Oh, let me turn this magnet back off. Bane of my existence. 1272 should get me right about here. That is a bearish butterfly. That's the first extension. That's at 96.79 on the dollar. Much stronger dollar. And this can go out to the 1618, my friends. 1618. Let me find that. Close enough. 97.05. This would be a very strong move for the dollar, and of course you would descend from that point. But you know what? With the news that comes out, yes, we would descend at point D, but I would expect we would just find support at the 0.5 fib and consider to consolidate and then move back up again. The dollar is going to reach highs it has not reached in 20 or 30 years, okay? If the Fed comes out with an aggressive move, this will affect all the currency pairs, which is why we're talking about it. Let's look at the Dow. Oh, the Dow hit the 786 fib and it could not hold and it fell apart. Not really interested in the Dow. I like shorting the SPX and longing the SPX. Guys, I put this trade in the room. This is on the weekly time frame. I drilled it down to the smaller time frames. There's so many bearish patterns on the SPX. It's ridiculous. So you need to understand pattern trading. We had a dragon pattern form. This is a weekly time frame. This doesn't look like a big dissension, right? It actually is a very, very nice dissension. This is a bearish pattern, but on the larger scale, guys, I want you to see something here. On a larger scale, check this out. So you have a double top printing. You can see this double top, right? Here's your neckline. Dragon patterns often form after the first part of the double top's been completed. So you have the double tops. And what this candle would do is drop it down, either break the neckline or come back up, make some more candles, and you get a dissension down, okay, like the McDonald's M. Where is my brush? Here. So if we look from here, right, so this is a double top baseline with a dragon form. Do something like this, okay? That's really ugly. Well, your neckline is right here at the Darvis box, 44.92. But what I want to show you is this. Let me erase that. That's embarrassing. What I want to show you is this. Let's grab the ruler. Let's get a measured move of this double top. Okay, right here is basically the top at 47.40. So let's grab the ruler, get a measured move. You're looking at 5.25, 5.26%. So let's just take it from the neckline, see where that would get you on a weekly time frame if we get that downward momentum, if this news is bad for stocks, if the Fed comes out with 5.2524. That gets you down to what? 42.56 on the S&P. 42. Guys, let's say what? 400-point drop. That's a really nice drop. That's a really nice trade. And of course, like I said, I do believe it would just be a period of pumps and dumps on a descending time frame for the S&P. That's the weekly time frame. Now, guys, patterns are all over the place. This is a bearish cipher. We're still tracking to this bearish cipher. This calls for this is a bullish cipher, I'm sorry. This calls for the S&P to go down to 41.43 before it finds support and move back up. This is on a daily time frame, macro time frame. For people that don't understand pattern trading, within this pattern, you will have bullish patterns on smaller time scales, okay? You will have bearish patterns on smaller time scales. 8-hour patterns, 4-hour patterns, 1-hour patterns. This is the overall arching pattern, okay? Because you can see pumps and dumps all throughout here. This pattern is still tracking the way it should, but on top of this pattern, you get other patterns, guys. You get other patterns like, yet again, another bearish dragon, okay? And a bearish dragon, this will drop the market just like on the weekly, just like it's doing already. But let's go ahead and get some price targets. We turn the magnet off. Let's get some price targets of where this could go. 618, the most commonly retraced to fib. Highlight it here in golden yellow. 44.47. 44.47. You know, another 240-point drop from where it is would be the most commonly retraced to fib, okay? And of course, you have your 200 down here between the 786 and the 886. All these are reasons, guys, why you should consider joining a trading room. Now, in the 8-hour time frame for the SPX, yet another type of bearish pattern, the white swan. We shorted it here, got a nice price decline on the 8-hour time frame, and then it came back up to test the extension of the white swan. White swan said, "You shall not pass," and dropped it yet again. Okay, the same price decline in both sides. And again, you can see clearly the double top here with your neckline. And again, this would also become a Darvas box as well. And you can see this right here. You break that neckline 46.63, you will be dumping, okay? And if we get below 46.30, you are in officially a bearish trend on the current trend for the S&P, okay? My candles will flip back to red. And of course, I have my volatility indicators to show me where the market volatility is to propel that drop, which is right down here below 46.30. So something to watch. Guys, the Russell, I keep telling you, the Russell is in a Wyckoff distribution box. The Russell 2K, look at this. Look at your compression waves you're getting in the Russell 2K. This is classic distribution box. Wide variety of compression, 11%, 8%, 10.35, 6.69, 4.5, back to 13%. You're forming another wave right here, and this is breaking down towards the downside, okay? If the waves start compressing more in one direction, even though it's hodgepodge all over, you are below the 200. The Russell, these are small caps, they tend to lead the big caps. If the Russell ends up breaking down, and for me, that number is 2085. If it starts breaking out of this Darvas box, 2085 and lower, watch what happens in the other markets. You're going to see some price decline. And again, you can see this. Look at this sideways lateral movement here of the Russell. You have down here, you could say, I have to back it way up, but you could say this is clearly your markup, okay? You have a reaccumulation right here, back on and markup, and here you go, distribution, boom, 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 buying and selling, buying and selling. Look at the elongated process here. Very clearly a distribution box at this point. The S&P, like I said, could be in the beginning of a distribution box, which you put it like somewhere over here on the front side, but this is distribution all over the place. And eventually this is going to collapse and come down, and you'll be back down here in this range. Okay, the Russell is going to drop, and when it does, it's going to take the rest of the markets with it. Guys, strong dollar will help my favorite trading pair. This trade is posted in the room. Bullish Black Swan. In my opinion, I think the guys in the room will agree, the best Forex pattern to trade are Black Swans, or at least in our room, because my God, these things tend to make us a lot of money, both bullish and bearish. Very early on, we hit our PRZ. Price is starting to pump back up again. This is a dollar at the base pair. So you will see, if the dollar becomes stronger, you will see this move back up. It's been slowly descending after this wild ride. I mean, this pair, well, here's another Black Swan that we traded earlier. Look at this Black Swan. Look at the movement you got from this Black Swan. That's absolutely mental. But Black Swans are fantastic, and the US dollar Mexican peso. Now, I believe our market intelligence person, Ricardo, he also lives in Mexico. I think they have their central bank meeting the day after the Fed. So they tend to follow the Fed. So will be a lot of news going on with this pair. So it is one that we are either in a trade on or tracking closely, depending on your risk tolerance. All right, guys. Market Makers Pro Trade Update. Hope you guys enjoyed it. Another video coming tomorrow. Enjoy the rest of the trading day. Talk soon, my friends. Check out our link in the video description. Special Christmas sale going on. If you do want to try out the room and join us, love to see you there and trade with us.